Hello, YouTube. So, in the year 2020, we've had a lot of retail investors and traders enter the market, and we've had people who've asked me, I use so many different brokers, and it's quite hard to keep track of my risk. And so, what's the best way to do this instead of opening each individual app and to have a look? I thought I would make a tutorial on how to build a very simple spreadsheet on Google Sheets, and to show you how you can log your trades and build a position view, and then use the Google Finance API to pull in live prices to track your P&L. So to do this, we use Google Sheets and start a blank sheet. So here we are. We've got our first sheet. Just give a title of let's call it portfolio sheet. And for our first trade sheet, we are going to simply do trade input. So what we're going to use are meaningful headers. So if you use your trade broker, they normally give you confirmations via post or via email, and most of all, they contain a trade ID for you. And what you would also want to do is include a trade date. So that's the date that you traded your stock or FX or commodities or whichever. We would also have to label that. So I call that the underlying instrument, underlying just for short. The base amount would be the amount that you are purchasing for that stock, or the FX amount, or the commodity that you're looking to purchase. First, we would have something that's called a clean rate. That is the rate that you would like to purchase either using limit orders or a market order. And then your broker will normally charge you a fee, and you're also likely to get charged stamp duty depending on where the country you're trading in. And once we get that, you combine all of this together and you would end up with a dirty rate, is what I would call it. Finally, the term amount is what you paid for or what you will get back if you sell your position. And finally, for good record purposes, you should always include the broker you traded with, so you are crystal clear of where your positions are sitting and with what broker. Finally, we call each position a book. And why do we call it a book? We will then use this book as a reference to try and accumulate all the positions that you buy for a particular stock. You may buy at different dates and all at different prices, and you can collate them all together to make your position. Finally, we're going to have notes in case you want to add any memo. So what we're going to first do is we're going to create some trades. So let's assume we had an interest to buy something in Apple stock, and our broker gave us trade ID. So let's just call this trade ID 1, which is the first trade in our book. We traded this today, and I think this is American format, so I have to do this. Okay, the underlying, right, we'll populate that shortly. We're going to get the Google Finance API to pull the underlying name. So let's assume that we buy 100 stocks of Apple shares at a price of $120. Your broker charges you $10 fee dealing with them. Let's just omit stamp duty for now. That means you'll have to pay a dirty rate to find out how much you paid in dollars for the 100 stocks that you've bought in Apple. Right, so to calculate this, you first take the number of stocks. So we're going to use a formula to help us. So you take the number of stock, and then you multiply by the rate that you would pay for when you leave your limit order, or if you left a market order just to buy, and then you add on the fee. That's how much you would have in total paid for, and we then divide it by the original number of shares that you bought, which is your true break-even price, what we call the dirty rate in this example. Okay, so that means the term amount that you paid for would be, it's always negative because if you buy shares, that's positive, and you pay for them, that means you're minus US dollars in this case. That will be $12,010. You can configure the formatting as well of this. I like to have numbers, and I prefer to see red as my negative numbers in general, and I like 2 decimal places. Okay, and let's say we use broker ABC just for demonstration purposes. Now the book, this is the bit where I particularly like the Google Finance API. So Apple is traded on the NASDAQ, and its ticker is this. Okay. Now, what you can do is here is if you can use Google Finance. Yeah, we will then select this ticker, and then the attribute that we wish to retrieve from the API is the name. So that will then populate the name for us. So that means you have just bought 100 stock at a price of $120, paying $10 fee, and this is the amount you paid to purchase that. Hence, your dirty rate here should be your at least what you need to get to break even. Okay, so that's very simple, I hope. And if you see more US stocks, they're all traded in dollars, so this should just be as is and like for like. Now you got to be careful of the quoting amount in different stock exchanges. For example, in the UK, instead of stocks being quoted in pounds, it's actually quoted in pence. So we'll do another example here. And we can do let's assume we buy 1,000 stock of Vodafone. So we're going to use Vodafone as an example. We're going to give it the rate, which is 125 pence. So this is in pence. Okay, your brokers will be charging you in pounds. So for simplicity, let's just use £10 again. Let's just omit the stamp duty here as well, and calculate the dirty rate. So this you can pull down here by copying and pasting. Okay, now you'll notice that this just doesn't look right because the units don't match up. Okay, and what we could do here is we just check it. So you have the number of shares multiplied by the clean rate. Okay, so the clean rate is priced in pence, but your fee is charged in pounds. So all we have to do is convert the price into pence, from pence to pound, and then you have that. And just for completeness, what we should do is include the stamp duty as well, if you are being paid stamp duty as you buy the stocks. So once we do this, okay, this is now correctly priced in pounds, but of course we always want to see things in market. So what we have to remember as well is to change this back into pence. Okay, so now this is how much you paid for in pence. Okay, notice this is also incorrect because this is priced in pence, so this is actually the term now in pence. Now for you to make sense, we would just have to divide this back by 100. So there's a little bit of a quirk for when you trade UK stocks, because UK stocks are priced in pence rather than in pounds. So this is something you've got to be wary of. So this is to buy 1,000 Vodafone shares, that would cost you £1,260, including the fee. Now, as we include the stamp duty, if you would charge a little bit of stamp duty, you see, that would then be include in here, which means in here you can also include your stamp duty as well once you find out what it is from your confirmation from your broker. So let's just call this broker XYZ because it will be a different broker. Assume you trade UK stocks with a UK based broker and you trade US stocks with a US based broker. Now for this we're going to use the ticker. So for that it's a VOD and they're traded in London. Okay, nice. So this, if you copy and paste this here, you should be able to find and use Google Finance API. As you see, it's pulled in correctly. So if we did just one more example, what we can do is copy and paste this, and let's say today we bought GlaxoSmithKline. They're a little bit more expensive. Let's just assume I bought 100 of that stock. They're priced at 1,255 pence, for example. So that would update accordingly, and we change the ticker, and this should be good for you to go. Nice. Okay, so that is how to build a simple trade sheet to start with. Now what we are going to do is we're going to build a position sheet as well. What this would help you do is this would help you track your position size, and it will also help you track your P&L. Again, I'm going to leverage off the Google Finance API here. So to build this, we're going to make all these sheets connect. First is the position that we're interested in. I'm calling this book just to refer to the same column from the trade sheet, so we can compare it like for like. We want to see the size of this position. We want to find out what the underlying of this position is, just for completeness. We then want to find the average price that we paid for. Let's call it average price. Then the term amount. Okay, this would populate for you everything that you need regarding your position. What you then want to find out is your current price as well, the current value of your position, and the P&L. Okay, so we would first start with the Apple position. Okay. What we first want to do is we're going to use the SUMIF function, because if you had more than one Apple position, you want to aggregate them all and find out what the total position is. Then you can find out what the total average price you paid across all of your positions are. So by using a SUMIF, the first range is the criteria range. So we go to our trade sheet and we're trying to look for the book. The second thing, the criterion, is the book itself, and we are looking to sum over the base amount. Close your formula. What you should see is 100 stock that we own in Apple shares. This we can leverage again of the Google Finance API. The next thing we want to find is the term amount that we've paid. So this is the amount that we have paid out. Again, we're going to look at the book. We want to find everything that is Apple, and then the total amount that we paid for this. Yep, and then we can format this. Just want to make things look good and easy on the eye. And then the average price we do is just your total amount divided by the base amount. And you notice that's minus because you take a minus number divided by a positive number. So to make that right, we use the modulus function or the absolute function on this, and that will generate you the positive average price. That should match up with your dirty rate here that you've paid for Apple. That's good. What we're going to do is I'm going to first highlight this cell, and what we're going to do is work out what our P&L is in this position. And the attribute that we want to pull is called price. So that tells you what the current price is of Apple as of closing day. The value is what it's currently worth. So you take all of your positions and you multiply by the price. As Apple is priced in dollars, you don't need to divide by 100 here. You can simply say, take that as is, and we can just format this the same. And then P&L is simply the value that it currently is, and because we've already paid it, you can just add a negative number to find out your P&L of this position. This will be in the pricing currency. In this case, it is US dollars. Now, why have we done this? To use the trouble of a SUMIF function here and here. Suppose later on you made another trade of Apple, and you bought 200 more shares, and this time it was at a price of $122. Again, same simple handling fee. Okay, so what we can do is, because we've already got this, you can just copy and paste like for like just to find out what your dirty rate was. And same here, and of course same here. So I'm just going to do all this together. And okay, what you notice now is you have 300 Apple stock and you've paid a total of 36,420. So your average price has now been updated given the new amount that you paid for, the new amount of stock that you own, and there's your updated P&L and the updated value for this at close of business day or during the day that you see this update live. Okay, we're now going to do the same for the phone. So as this has already got references, we can actually copy this down. That should work. The formula, as you notice, will move with it. So this we should be able to move down. Okay, now we're going to see a little bit of a problem here, because UK stocks is priced in pence. So what we have to take into consideration is we've got to multiply this from pounds and change it to pence. Okay, so your average price is now back in pence. Similarly, your value, you've got to make sure your base amount is multiplied by the price, but your value should be in pounds. So you've got to divide by 100. And now you see you're at a loss on your current Vodafone position on our demonstration example. And similarly, you can copy and paste each line of these. As you know, you've got a matching currency. And if we updated it for GSK, that has then updated itself as well. Great, so we're at a loss on our demonstration trade as well. Thank you. I hope this has helped you to aggregate your trades as you fill out this trade sheet. You can just keep on adding new positions here, and just for completeness, we are going to just show you that this is formatted in American date time format. Okay, instead it's actually in UK format. My apologies. Let's just correct that. So there we go. I hope you've enjoyed this video, and please like, subscribe if you would like to see more finance content.